Cheers to a catalyst-filled Wednesday on this day after Team USA's glorious victory, 0DT team. It's called soccer, and this is your routine briefing. We're going to start the day by going over the warm-up, and then we are going to talk a little bit about yesterday's results, any tweaks, etc., and then I'll let you go. I'm involved in some trades already because we are trying to navigate this overnight low, so I'm going to try to keep it short and sweet so everybody can focus. And we all know that all that matters is 1:30 anyway. So 1:30 Eastern, our friend Powell comes on, and that's probably going to be the major catalyst of the day. So that it is possible and likely based on the premium that that's going to move the market. You remember that these end of months very often have trend type moves. So if as the day trends lower and continues to trend lower, it is highly possible that Powell just kind of continues that move. Usually with any time he comes on, there's a lot of those trappy type moves where they fake one way and go the other. So we'll have to cross that bridge when we come to it. But yeah, so 1:30 Eastern, that's Powell, and let's look at what the market is giving us so far today. So you can see this document; it's in the description. You can just kind of highlight everything, just go over it if you want to see what it means. I'm packaging it now all in this nice little comment, and then these levels are just expected move, futures levels I'm watching, and these are the engagement levels for me personally today. And you can see this is a volume profile setups. When you hear me talk about setups, that's what I'm looking at there. So just real quick, let's review the comment. Let me make sure I like my position here. Slightly short, but might want to get a little shorter. So I'm just going to be watching out of the corner of my eye. So let us zoom in here and look at our comment. So November's ending. It is the lowest volume month of 22 by far, 2022 by far. For me personally, it's not been a fun month. Um, I'm barely squeaking out green, and I mean a lot of it has been this testing, obviously, but yeah, it's just not been really good for these breakout type plays. And I really started that second week of November messing around with this breakout strategy, and then you get that tape in the low volume, and you're just not gonna perform well. But that's okay. In the long-term wealth building portfolios with the taste trade style, obviously it's been amazing. So that does kind of make up for the lack of day trading opportunities. Um, Anyways, the whole point of that is just kind of watch for that volume to start increasing today. If we do get a big volume spike, depending on which way it goes, I think it could be pretty reliable in leading to the next perhaps December trend, at least until those FOMC minutes or the next CPI. So you can see if you look at any longer term chart, I like to look at the 4-hour chart. We did make that RSI correction yesterday, so that little bounce from that 40 area where we kind of settled around 60, that did correct that oversold RSI. So although it's on the lower end, obviously I don't think that we're oversold to the point that buyers are necessarily going to come in. Obviously RSI is suspect to begin with because we can be super oversold, become more oversold, but I'm always a little wary when we're at one extreme or another, and so we've kind of corrected that a little bit since yesterday. Additionally, so if you look at the volume profile on a yearly, so if we look at the past 2022, the yearly POC is now at 39.65 to 70. The weekly POC for this week is at 65 to 70, and the monthly POC from November is at 65 to 70. And on top of that, the structural pivot for today is at 39.70. So that level, no surprise, we've seen how much we've been hanging out here for weeks now. It is really kind of, I think the battle lines are drawn there, and until something changes and volume builds and the POC relocates, I think that's really the major pivot for the overall ES market. So just kind of what I'm looking for today. I think below 39.40. If we get it below Powell, or even with Powell, we always want to look for that false break first. ES loves to do that false break. However, we start to build time and volume. I think it's a quick move down to 20, and depending on what it is, I think again if it's a Powell induced, we could very easily see further move from there. So I think the first look at that 39.40 area, we look for that false break, and then after that, we if we don't get it and we start to build that time and volume, we start to get various sponges, various other whatever indicators you're using, you start to see that momentum is keeping us to that downside. I think it's a real quick move to 39.20. And again, depending on time of day, like I said, if it's after Powell, if it's Powell induced, very likely, or actually very likely, very possible we go lower. So that 39.20 retests the breakout that we had last week, if you really want to call that a breakout, um, and that's why that's an important level there. So on the upside, I'm really looking for fades, so I don't really want to get involved too much before. So I'll look at 70. If we get strong signals at that 70 area, I'll look to fade it there. But really, I'm looking at that 4,000 area first. That's that open. It's that 15-minute range that we discussed from the other day, and that's still untested, and that's about 4,000 to 40.20. So I'm going to look for a fade in that zone. If we go right through it, I'm going to look for a fade at the gap. I'm not, unless volatility really starts to break down. We'll look at the volatility chart in a second here. I'm really not bearish today, or excuse me, bullish today at all until something changes. So I'll be looking for those fades. Obviously, it could be wrong. We could go all the way up to the SMA, and so be it. I'll play what the tape tells us, but first response is going to be looking for those fades and those false break looks to the upside as well. So um, that is our warm up for the day. I'm going to go ahead and minimize that. Let's real quick look at my results for the past 2 days. So yesterday, we had it was the second day of the beta test, and we were very lucky to already get that worst case scenario. So my worst close yesterday was at about 65. I think it was 63 if you want to be specific. And we closed, as you can see yesterday, at about 61.50. So it's pretty much like pinning a butterfly on the second try. I don't think I can say I've pinned more than 5 in my entire life. So I think it's real special that we did get that more or less worst case scenario yesterday. So we did give up the profits from the day before, as you can see, with commissions and everything. We're down about I'll say 500, 600, 600, 700 bucks. I'm not really sure. Can't add, um, but that's what we're looking at. So we'll see how the test goes today. I had a nice talk with my friend OJ after market yesterday, and he was giving me some good strategic insights. So I'm gonna be playing around a little bit today, more so looking to, instead of just putting on that entire long side right away, kind of layer into it, and also using futures as a partial hedge. Speaking of which, I gotta watch as the tape is moving up here, potentially add and buy. Okay, so yeah, I'll discuss more. Like I said, I'm kind of in the middle of a trade right now, so I don't want to get too into the weeds. And I think it's going to be a pretty exciting day, so I want to let you guys go. I am running a little bit late. See, it's 10:40 here already. So that's the results yesterday. Worst case scenario, we're still okay on the week, and we will make the adjustments. That's why we do the beta tests, and real quick, one of the adjustments is those device signals that you can see in that if you just go to retailtrading.com and search for the weekender. I'm going to be using those device signals just kind of like I have been as a separate trade, but the with this zebra style trading with these long options, theta's working against you. So if you by adding those devise type trades into it at the extremes, obviously it will either just serve as a hedge that inevitably gets stopped out, or it will help us buffer some of that losses. So we were just looking at it yesterday. If we take the device signals and hedged with futures, just according to the sponges and the way one trades futures, we would have cut the losses by 2/3. So that's what we're looking at there. So just that's one quick thing. We'll go into more detail as time goes on here, but I just wanted to show you that because I didn't tweet yesterday, and I want to make sure um, we're super transparent on these results, and because I think that's important. So that's what we're looking at on the results side. So let's real quick look at our chessboard, and then we'll look at volatility, and then I'll let you go. So on the chessboard chart, you can see still. So this distribution is a couple different sessions, the overnight, and includes I think part of yesterday. You can see where the TPOs are still one time framing down. We're building nice supply here, and we have one chunk of demand left. I just carried it down to the low there. But really, the most important part of it is this 50 area where we're seeing the bounce today. But the Bears have done some good work. So we started the week off, or wondering if they could build some momentum, and they are putting it in. It's obviously all depends on what Powell does. Yet that's the look we have today. So I do think the Bears have the advantage, especially below that 39.70 number. That is the POC. That is our pivot. That is just the most important level on the chart, hands down, right now. So that's what we're looking at on the chessboard. I just want to point out though, volatility is really not getting going much at all. So you can see yesterday, um, we didn't even make a higher high with that lower low in the market, and you're seeing today it's just still pretty lackadaisical. The premium is great in the option chain itself. Again, we're expecting, or powers that be are expecting something from Powell. But if you watch volatility and just kind of the fear itself, it's not too high. It's not like we're making higher highs by any means. We're not making lower lows really either, but it's just kind of moving sideways, waiting for that catalyst, and I think we can go from there. So 1:30 Eastern is Mr. Powell. That is going to be, I think, uh, very important for not just today, but for several days to come, perhaps even for a week or two to come. So fingers crossed that it's exciting and that some volume starts to return. And regardless, please feel free to engage with me on this video in any of the links. I always package this up in the newsletter, so if you're not subscribed to that, please do so. And you can just reply to the newsletter anytime if you want to talk to me there as well. And also, I'm on Twitter, so Routine Trader on Twitter. There's a link in the description for that too. And that's all for today. So let's end the month out strong. Let's stay nimble and manage risk really well when Powell comes in. And let's get excited. I think we're going to get some volume today, and I think we're going to get some nice moves. So I will talk to you tomorrow, and stay classy until then.